Grid. Guess what? Today I've got Shannon Robnett. Is that how you pronounce it?
Yes,
Or did I
sir.
get it? Okay. From,
Absolutely.
from Boise, Idaho, who's just back from Madrid and Tossa del Mar in Spain. And we were just talking about how awesome that is and how I need to go there to celebrate my 50th, which is kind of crazy, right? But welcome back, Shannon.
Thank you. It's great to be here with you and your listeners, but I got to tell you, Spain would be rather pleasant experience as well.
Yeah, man. Yeah. Well, thanks for joining us, by the way, and definitely we're gonna catch up on some more on Spain and maybe I don't know. Did you get the itch to like buy a little something there when you were in Spain, where you were like, oh, maybe we do a little Airbnb or any?
Of course. I mean, if you didn't, the entrepreneurial bug wasn't really, that you weren't that infected, right?
Yeah,
But the thing that I love about that is you can take that anywhere, right? Anywhere I go, I'm picking up the dirty real estate magazines, I'm thumbing through them, I'm talking with an agent. And so obviously when I came back, I gave all the receipts to my accountant. So we'll see what she does with that.
but that is the mark, right? Like that's when you know you've been infected. Like everywhere you go, you're always like looking at real estate. You're looking at it through a different lens. And so I'm curious, how did you get started? Like what got you on this journey in the first place?
Well, unfortunately, I wasn't infected. I was indoctrinated. I was born into a real estate family. My father was a builder and developer of industrial, single family homes and then industrial.
Hmm.
And my mom was a real estate broker for 40 years. She was actually third generation realtor. So I'm a fourth, my son's a fifth. Um, but the thing that I learned, I mean, and I even told this to Robert Kiyosaki, is when I read his book at 19 years old, I, I I couldn't figure it out. I didn't understand why everybody was blowing up the world about this purple book
Hmm.
because it wasn't. It was the way I was raised. I was raised with poor dad, right?
Hmm.
And it didn't make sense to me why the rest of the world didn't know this. And yet I still thought I was smarter than my parents, and I was going to go to college, and I was going to be something in computer information systems, right? Because you got to understand that was 1992, right? I
Hmm.
mean,
Hmm.
so that was a pretty new field then, and I was going to be something in that. And I went to college, and they had this thing called attendance, right, and testing, and all this other stuff. And so after about a semester of college and watching my brother build single family homes and make about $48,000 a year, and right out of high school, I decided, 1993, that that probably wasn't for me, and I began my entrepreneurial journey with some assistance from my parents, but all they really did was got me started, and
Hmm.
I mean, we got with the bank, we got a bank loan. I built a single family home that I sold for $79,000 that, I think it's currently worth about 350 or 400.
Hmm.
Um, and I just saw how I could do that, and I could make a living, and I could have my own company and everything. But then I realized that I didn't like the scale of single family homes, and so I wanted to get into commercial, and I launched my commercial business in 1999, and we were doing exclusively commercial construction. And I began to see also with that, Rob, very quickly, that when I got done with the project, I was done getting paid, you know. And this was a business. I was an entrepreneur, right? But I was not getting, I mean, I had to go out and kill what I was going to eat this week. Or, things got pretty skinny around the dinner table. And yet I saw a lot of these guys that I was building for, they just built them and rented them out, whether it was medical office, whether it was industrial space. It didn't really matter. Multifamily, it didn't really matter. These guys were making money every month after the job was done. And so I really began to kind of look at that. And my dad retired in 99 with cash flow. And,
Hmm.
that's what Robert Kiyosaki always talks about, is get to cash flow, right? You got to get to cash flow. And so in 2001, I built my first industrial building that still has two of the original tenants in it that I put in there, 22 years ago.
Hmm.
Um, because where else are you going to make gelato ice cream for restaurants, right? Where else are
Hmm.
you going to make batting cages for schools, right? These were just two of the businesses that went in there, but they've continued to pay rent, and they've continued to, pay an escalated rent every year, and it's gone up, and it's been a great investment. But that's really when I realized, okay, I can create a business that I've got to be in to run, and I've got to be a part of it, and I've got to make things happen, or I can create a lifestyle through investment, still construction and development, but investment in real estate that has cash flow long term attached to it for as long as you own the property. And
Hmm.
so in that era, 2001, I began to shift to a developer because I could see where I could do more, I could be more. And then I just slowly over the last 15 years from then, till about 4 years ago, we were still a for hire construction company along with my own personal projects. But the last 4 years, we've just strictly been uh, an exclusive working for our own developments. And,
Hmm.
at that point, I would go out and I'd grab a partner or two and we'd do a project and, we'd split the monies and do that kind of stuff. And then in about 18, I got introduced to syndication, not
Hmm.
the normal route. Again, Rob, nothing's normal in my life, right? I got introduced to it from a guy that used to work in the movie business. And if you know anything about the movie business, they syndicate all the capital because you can't really get a loan for a couple $100 million to
Hmm.
create the next epic whatever, because if it's a flop, the bank's not going to take that risk. And
Hmm.
so he showed me how to syndicate capital and create capital stacks and preferred equities and all this kind of stuff. And so in the last 5 years, 4 years, really, we've been able to continue to improve on that model. And we're now everywhere from Washington to Florida on projects, and we've got a lot of great investors that are benefiting, and we are as well. So it's been kind of a crazy journey.
Shannon, that's fascinating. How did you meet this particular gentleman that then opened up the whole syndication
Well, through a
idea?
lawsuit. Um,
Okay.
my partner and I, it was the last project I did with a partner. We were building a 180 unit apartment complex, and he was part of the buyers team. And we wound up in a lawsuit with the buying team about some of the inner workings of the contract. And this gentleman kind of said, this isn't how I roll. And he kind of got out of that partnership. And then he's like, well, I'm freelance. Do you want to know how to do some more of this? And so we started collaborating on a couple of projects, and they went very, very well. And, he was a solid guy with a great business mind and an understanding of financial modeling. He knew nothing about
Mm-hmm.
commercial construction and development, but as an entrepreneur, he had his skill set that he could then become important to important people, which is a
Hmm.
phrase I use a lot. And he was able to come into my world and say, hey, I can show you how to do this for a piece of the action, right? And so we began to build out a partnership that way, and everything. But it was just through continuing to do what I was doing and looking for other partners and things like that that I really discovered how to not only multiply my ability to take on and complete projects, but also to provide handsome returns to our investors that were interested in either the tax benefits that we were getting, the cash flow, the appreciation, but really most importantly, Rob, they were interested in being passive.
Hmm. Hmm. And describe that for our listeners. Like, um, obviously we've got active investors, we've got passive investors, but your typical profile of an investor, who are they? Right? What do they look like?
Well, we've really broken that down into there are three investors, right? There's the guy that wants cash flow. And those people tend to be at the end of their earning life. Either they've made enough money that they can live on 7% return on that money, right? Whether they've done really well or they're in the late 50s, early 60s, they've got a nest egg that they can invest, that monthly money is attractive to them.
Hmm.
The second investor is usually a younger investor that has $100,000 or $50,000, and there's no way 7% on that kind of money is gonna do it for them. So they need appreciation. They need to be involved. They've got maybe a lot more runway in life to accumulate. So they're looking at it, going, "Hey, if I could get into the development game, there's more reward there. There's no cash flow, and we can do some of those things. Then I can appreciate this, and I can turn this 50 into the nest egg that the cash flow investor has, and in 20 years I can have what I need to be retiring on cash flow." And the third investor is usually a uh, someone like a doctor or a lawyer. It's making even we have a lot that are in the tech industry. They're making $300,000 or $400,000 a year. they live a pretty simple life, but they're getting clobbered in taxes, right? They're paying 37%. A lot of them live in California, so they're paying 61 total with the state and the Fed, and they're looking for relief. And so we get those guys involved in the depreciation game, the bonus depreciation and the opportunity zones that we work in. And so we're really able to construct things that show them how they can benefit by beating Uncle Sam at his own game, or reading the IRS code as not as a penal code. A lot of people read the IRS code as a penal code, but it's really something that encourages you, if you make these kind of investments into new equipment, into new buildings, into new infrastructure, we're going to reward you with tax credits. Yeah. And so we help them understand that and help them get on that track where they're able to come in and say, hey, I would like nothing more than to save 30% of my money from the tax man to invest so that I can continue to do my job. I can live well. I can pay less in taxes. And that money, that 30% that you're saving me, instead of sending it off to Washington, D.C. and watching what they do with it, you can invest that in your future that then will create cash flow that allows you to walk away from your very lucrative job without having to concentrate and focus on what you're growing.
Yeah, I love that. I think the first time I'd heard of that concept of that the IRS really built the code to incentivize you in order to incentivize us in order to do the things that they want, like promote entrepreneurialism, provide affordable housing, like all the rest was from Tom Wheelwright's Tax-Free Wealth.
Yeah.
Right? I don't know if you read that, but
I've read all of Tom's stuff. And the thing I love about Tom Wheelwright is he writes it for the common man. He understands accountants, but he doesn't speak accountant, right? When he's talking to you or me, we get it, right? And he's really simplified it to where we can understand that, yes, this is what needs to be done, and it's really not that difficult, and it's something that we can definitely implement and do to reap the benefits.
Shannon, what kind of commercial do you specialize in? Right, like commercial is a big word, right? There's so many different facets.
Yeah, that includes multifamily, office, industrial, medical. We tend to like the industrial and the multifamily. But when you really look at it, most of my portfolio, my personal portfolio, is in industrial. And the reason that I like industrial is because industrial leases are triple net leases. So what that means is, and industrial leases are usually, 5-year term. 10-year term is not unusual, with 2 or 3 10-year extensions. So you could have a tenant. We've got one right now we're building for in Florida that has a 10-year lease with 3 10-year options. So without any say from us, they can occupy the building for the next 40 years. Well, the hard part with that is, how do you estimate what the property taxes are, what the insurance is going to be, what the lawn care is going to cost in 37 years? I mean, the Jetsons will be doing it, of course, but I mean, you're my age, so you get that joke, right? But what is it going to cost? And a triple net lease really says, okay, here's the rent, and we're going to estimate all of these other expenses that are going to be a pass through to the tenant. And so the tenant then reimburses the landlord based on an estimate of, $2.50 a year per square foot for property taxes, insurance, maintenance on the building, the roof, the HVAC systems, all those kinds of things. And at the end of the year, we reconcile that and the tenant reimburses us. So we're able to take an escalatory clause that says, hey, every year we're going to take 3 or 4% in escalations. And I have a CPI rider in there that is Consumer Price Index that helps us. Nobody cared about it, Rob, until a couple of years ago when CPI started going nuts. And then my tenants took an 8.9% jump last year, right? I loved it. They weren't particularly thrilled with it, but they also knew that we'd locked this in before all this inflation started. But it really protects the landlord, and it really keeps things even for me, because I can say, this is your rent, and I can lock it in for 10 years, and we're going to take these escalations every year or every 2 years. You're going to pay the expenses, and now you have a place to go build a business, whether it's 2,000 square feet or 50,000 square feet. And, you've got tenants in there that have credit. They have personal guarantees. They have a balance sheet that's worth something. They're not willing to move their business for $35 a month in rent. So you have tenants that they're business people. They look at it and they go, if I move, I mean, gee whiz, we can clean out an apartment in, 4 hours, right? Uh, but if I'm
But
looking to
business
move
is harder. Oh yeah,
yeah,
for sure.
if I'm looking to move a business, I've got to take all the equipment out. I've got to have my employees still pay them, but they're not producing anything. My system's offline. And so they tend to stay. Like I said, I've got two of the tenants that are still there after 22 years.
Wow.
And I don't know that I've spoken to them in
Mm-hmm.
22 years.
Mm-hmm.
You know, I mean, the
It's
check
so
still
true.
comes, and so there's no reason.
It's funny. A good friend of mine started off on the residential side, like wholesaling, rehabbing, like a lot of people do. And then he built not a couple, built like 15, 20 luxury new construction homes in Arlington, high affluent area where we live here in the DC metro. And then he just was like, you know what? I'm tired of the residential nitpicky,
Yeah, that's
consumer. I want to
that's me,
focus.
man.
Yeah, he's like, I want to focus on the business side, the business individual. He wholesaled the pharmacy, and then he just started getting into like small commercial. And
Yeah,
before I knew it, I mean, he's built a massive portfolio,
yeah.
right? And he's like, I love it so much better than the
Well,
residential side.
and the other side of it is, I mean, multifamily has been everybody's darling child, and for a lot of the reasons you mentioned, a lot of people they start in wholesaling, which I got to give it to the wholesale hustlers. These guys work their buns off, man. I mean, you do more work in wholesaling than I think any other aspect of real estate because you got a hot potato in one hand and you got to find somebody that wants it in another before this bomb goes off. And you're doing it to make a couple of bucks, of which are all ordinary income that Uncle Sam is swiping a huge chunk of it. So when you're really successful on that end, you're getting clobbered on the other end, right? And you got to go hunt every single day. But a lot of people get involved with that because that's their door in. They don't have
Hmm.
capital, they don't have the resources, they're not connected with the people. And so they scrap this out, they get this thing put together, and then they realize, okay, maybe there's another way. And they
Hmm.
take the next step up where they do the burr strategy and they get their money back and then they do it again. And then they've realized that all they've done is built themselves another job because now
Hmm.
they've got 40 of these people that are going, hey, my AC doesn't get cold enough. By the way, the neighbor's dog barks too much, and oh yeah, Earl parks in my spot. And so you're looking at that and then you scale again. And if you look at it, there are a lot of REITs that are involved in industrial.
Hmm.
And they're involved in industrial because it doesn't fluctuate like we saw multifamily do. The last couple of years have been darling for multifamily. This last 12 months has been a little bit of heartburn. We're
Hmm.
getting back to reality. It's going to reset a little bit. And meanwhile, industrial still chugging along at the same price point and a lot of the same cap rates that it's been at, and it's stable. It's really
Hmm.
something that you can count on, other than a business going out of business or a business owner dying or something like that. Something really drastic like that. These businesses chug along, and they just continue to pay the rent, and they continue to do what they've always done.
What is the biggest challenge that you face in industrial? What's the hardest, what's the biggest hurdle? What's the biggest challenge? Like if I wanted to get into industrial, which I never have, right? I own multifamily, a lot of single family houses. Uh, but what would you say is the biggest hurdle for somebody
A
getting into
lot of
industrial?
people struggle with the long-term mindset. And that sounds funny, Rob, but especially the last, 19, 20, and 21, everybody was flipping apartment complexes in 18 months, right?
Hmm.
Industrial's a long game. You get into an industrial deal, we've got a deal, like I said, we're doing in Florida. It's got a 10-year lease on it. We'll hold it for 7 years. We'll get some really great cash flow on it. We're getting
Hmm.
4% appreciation on the rents every single year. So we're chunking up pretty good on our cash flow. And we'll sell that about year 7. So somebody knows that, hey, 3 years from now, I might need a new tenant, but we've elevated the rent and we can really calmly calculate that. Where a lot of people are coming in, they're going, hey, I want to get involved in multifamily because it's going up, it's booming, it's this, it's that. And we are somewhere between 4 and 7 million housing units short in America. So there's reason for that, but it's a little bit more of a maverick, and you may or may not have a 7-year window.
Hmm.
And a lot of
Hmm.
people, when they first get involved in investing, they like the trading, the day
Hmm.
trader aspect of it. Man, we bought this and 12 months later we exited and we all made great money. There's none of that. So if you're looking for excitement, multifamily will give it to you, where industrial, it just doesn't have that allure. But if you're looking for something like Chef Tony selling all the time, to set it and forget it, that's where industrial can really work for you, because you purchase it. We did a deal in Houston, Texas, 5 months ago. We got 10-year fixed financing, um, from a life insurance company, cheaper than we could have got multifamily debt.
Hmm.
And you've got a prepayment penalty in there. But other than that, you've got debt that's good for the next 10 years, you know?
Have you been primarily doing ground up? Are you doing value add, or what are you doing with your industrial? Like,
Both.
mhm,
I'm very, very familiar with ground up. But I also look at opportunities. And what we do with that, Rob, is we identify a market first, right?
mhm,
You've seen these guys that one minute they're in Cincinnati, then they're in Chicago, then they're in, California, and the only thing that they have in common is the C is the first letter in the name, right? But we really go in and we look at it and go, we really like Houston for industrial, right? We really like Nashville, Tennessee for multifamily. We really like North Carolina, Raleigh in particular for both of those. And we
mhm,
look at the demographics and we take that apart and we go, okay, first of all, what's the median household income, right? What's the job growth rate? What's fueling this economy? Because Rob, I'd really much rather do a good deal in a great economy than a great deal in a good economy, because
mhm,
I would
mhm,
rather have the whole economy working for my benefit than have the shining star, the Starbucks or the Walgreens, right? In downtown, let's call it Chicago, probably not a great place to invest if you're looking for job growth. And
mhm.
if that particular client goes out, you can't replace them.
Yeah.
Nobody's going to pay Starbucks rent, right? Nobody's going to want an old Walgreens, right? So we look at that, we say, man, we really like these economies. We like what's going on in Phoenix. And then we decide our product type in that area. And then we only look at those markets and we only look at that product type.
Hmm.
And so we'll look at it and we'll say, okay, you know what? Raleigh, North Carolina needs industrial, and it's got a lot of old industrial that's really poised for value add. We'll take either of those in that market, right? And so we really kind of break that down that way. So we're looking at kind of a singular type, of investment, and then we look at, do we build new, because there's value in that. You're taking the original sticks and stones, you're putting the tenant in, and you're creating that value add, or is there enough meat on the bone to buy this one, raise the rents? We're coming, the deal we did in Houston was exactly that. Guy built it during COVID, tenantized it. Everybody has a 2-year lease with no escalation. So great. Those all burn off in the next 9 months. So we'll raise all the rents to market. Uh, and in fact, because they're businesses, we'll push them just a little bit past market, right?
Mhm.
Get on the high side of that because they're not going to move over a couple $100 a month. And then we've got a situation where those are 5-year leases and we don't need to show back up, right? So then we've got local property management that's taking care of the daily on that, and
Mm. Mhm.
billing the tenant for the expense.
When you're going into a market, let's say it's Raleigh or it's Phoenix, what are kind of like the things that you look at in that market? You're like, you know what? This is the type of growth that we're looking for when we go into the market. This is how we analyze how much industrial is already in that market. I mean, how do you what's that mix,
Yeah.
right? Or maybe that's part of the secret sauce. I don't
No,
know.
listen, there's not a lot of secrets. It's how you blend the sauce, right? I mean,
Mm,
what's your 11, what is it, 11 herbs and spices, right?
mhm,
But when you look at Raleigh, we did a market study on Raleigh, and we saw that unemployment is lower than the national average by a long shot. You've got
mhm,
inbound traffic; people are moving there in droves. Housing is more affordable than a lot of the places around there. I didn't know this, but within 6 hours airplane ride of Raleigh, 2/3 of the nation lives.
hmm,
I think it's within like 350, or it's 500 miles. Within 500 miles of Raleigh, North Carolina, 2/3 of the nation live there. And you look at the inbound traffic, and then you look at the colleges and the amount of money that Duke University spends on R&D is in the billions, right? So you're attracting, entrepreneurs, you're attracting people that want to build businesses and want to start ideas, and startup companies need space, and so you've got stuff growing. Then you
mhm,
look at the wage, The wage is higher than average and the housing cost is lower than average.
Mm,
So now
mm.
I've got a spread where people
Affordability.
can,
Mhm.
yeah, they can raise families and they can do that. So that's very attractive, especially when you've got New York continuing to raise taxes, continuing to have things go the opposite direction and become less affordable. Um, so you look at something that I look at it this way: if the world goes to hell in a handbasket, where do you want to live? Raleigh's on my list, right?
Mhm.
I would love to live there for all the affordability that we talked about, the job growth that's happening, all
Mm.
the things that I don't have to worry about because maybe I'm in technology and that goes down. The dot-com bubble hit a lot of people really hard and they
Mhm.
shifted into another industry. Well, when you've got inbound traffic like you do in Raleigh, now you can go into insurance sales. You can go into
Medical.
home
Mhm.
warranties. They've got a huge component of medical going on
Mhm.
because of the research coming on at the hospitals. You know, one of their universities is in the top 3 universities in the nation for startup companies.
Hmm.
You
Hmm.
know, so when you
Mhm.
look at those things, you really look at it and go, "What's good? What is happening? What's hot?" And if you want to know what the difference is, directly compare it to San Francisco. And if the numbers match, but they're going the opposite directions, you've got a winner, right? I mean,
Mhm.
because
Mhm.
San Francisco's shedding people, taxes are going up, affordability's going down, but you've got the opposite over here. So when people run into hard times, they run to better markets.
Yeah. Yeah. So true. I love that. I mean, there's so much gold in what you just said. I want to make sure that we like unpack that for everybody in like the show notes because there's so much gold that's there. Well, let me ask you a question. As you've been in the business 20 some odd years. How many years now? 25 or is it 30?
Well, if you count my indentured servitude starting at the age of 18, but I've been doing my own company since I was 20.
Okay.
Yeah.
Where do you want to take this and where are you taking it moving forward?
You know, this might sound a little funny, but one of the things that I found, Rob, over the last 4 years as I've been involved in syndication is I've found that it's people like you that are putting information out there to educate other people so that they don't have to blindly believe Wall Street, right?
Mhm.
I
Mhm.
mean, we're marketed to by Edward Jones and all these other guys that trust us. BlackRock. There's only 2 nations in the world that have more assets under management than BlackRock, and it's
Yeah,
China
it's
and the
crazy.
United States, right? But if you think that that machine is going to respect you and take care of you, you need to have your head examined, right? And so for me, helping educate investors on their ability to take back their life, their
Mm.
ability to lower their taxes, their ability to increase their cash flow, their ability to increase their nest egg, how to use your IRA properly, those kinds of things. Educating people like that, Rob, I think if we would have had, I think if podcasts would have been a thing in 2006 and 2007, I don't know that we'd have had a market crash because we
Mhm.
would have been able to educate people.
A lot of people would have seen it coming. There would have been a lot
Like,
less. Yeah,
and
for sure.
and a lot of the negatively amortizing loans would have been taken out because it made no financial sense, right?
Mhm.
It filled a need. It got you into a house you couldn't afford for 14 months, but what were you going to do after that? You know?
Mhm.
And so I look at that and I go, really where I want to take this is I want to take this to a place that allows me to put myself and my companies in front of a lot of really good investors that allow them to take their personal financial freedom back,
Mm.
allows them to look at something other than being 65, having dedicated 40 years, 45 years of your life to something to create enough that you hope that at some point down the road you can retire and you have no say over any of this, right?
Mhm. Mhm.
That's
Mhm.
really where I want to go with it. And in doing that, I've got to continue to be on the hunt for good investments. I've got
Mhm.
to be able to be on the hunt for, ways to educate, ways to help people understand. And out of that, yeah, I mean, there's a financial reward involved, but the reality is the more people that I can help take back their financial freedom, that's really where the satisfaction in all of this comes, Rob, because seeing people be able to make the choice of whether or not I'm going to go to work today is really an empowering thing.
Shannon, it's interesting you should say that. I think over time, business owners and entrepreneurs find the deeper meaning in their work. Like right when we started off, it was about the hustle, right? It's like,
Right.
okay, you've got to learn how to make money. You've got to then learn how to do something with this money. And then eventually you realize, what's the purpose of
Right.
all of this,
Right.
right? And I think that the entrepreneur that understands that the purpose is in doing exactly what you just said, right? It's in being able to, you could do both, right? You can do good and help people, build things along the
Yeah.
way. Oh, as you build things along the way.
Right.
That resonates deeply with me. By the way, that's the purpose of the podcast,
Yeah,
right?
no, and I love it because when you're taking the time to collectively bring all these entrepreneurs together and provide this information to people where they can go, that Robnet guy's a little bit of a whack job, but I really like what this guy's saying, and putting those together because you know maybe what I do isn't everyone's cup of tea, but getting that information and being able to educate yourself and understand where you can go. I think Elon Musk was very intelligent when he said everything you need to know is on the internet, right? It's all on YouTube. You can learn
Hmm.
anything on YouTube. But how many people actually take the time to educate themselves, to set themselves free so that they can get to a place where their choices are really their choices? You
Hmm.
know, and
Hmm.
I read a good book by Tony Robbins, Money, Master the Game,
Hmm.
and he does this illustration in the book where he says, okay, what do you want? What is retirement to you? Not a dollar amount, but what activities involve
Hmm.
that, right? Are you golfing every day? Does it involve a beach house? And most people realize that their retirement goals are pretty simple. It's really about time control. But you start putting dollar amounts to that and you realize that, man, the average person in America today, inflation adjusted, can probably retire on about $3 million that's producing income, but we never learn how to make the money make money,
Hmm.
right? We learn how to
Hmm.
make money. We're trading time for money. We're trading, we're maybe if we're an entrepreneur, we've got a business, we're multiplying that by having employees. We're doing those kinds of things. But at the end of the day, it's really about learning how to send your money out and come back with friends, right? And
I forget what book I read. It's like every dollar is like a little soldier that should go
yeah,
out there into the world. Yeah.
yeah. And how
Take
do you
territory for you.
And how do you know that? How can you vet that? How can you understand that? You can't possibly understand every startup company that comes across your desk. But what are the things about startup companies that make them successful and what are common in these ones you're looking at? Whatever
Hmm.
it is you want to be involved with, whether it's medical technology, whether it's real estate, whether it's, Bitcoin and blockchain or, exotic cars or whatever it is you want to be able to learn how to make money with it. It's important that you drill into that and become the expert on that
Yeah. Yeah.
so that you understand I'm looking at really good underwriting here. I'm looking at
Hmm.
things that make sense that are based in fact that I can find in research
Hmm.
rather than, we really want to buy this apartment, paint it purple and raise the rent $400. Well, the rents are only 800 now, so you want to go 30% on the rents. And do you think purple's the right color? And you don't need to get into that minutia, but you can see that, hey, this is a good pro forma and this should work. But what contingencies do they have built in? What if this doesn't happen? What if we don't get the rents? How are these guys going to protect my money?
What if
And how
interest rates go from 5% to 8% in the span of,
14
12
months,
months?
right?
Yeah.
Yeah. And so when you understand those things, then you can look at the business plan. You go, this business plan works for me. This guy's got
Mm,
two contingencies built in. His numbers are, they're not in the 20s, they're in the teens, but he's looking at an 8% refi in 4 years. He's looking at a 7% cap rate, and all of those can change to my benefit. But
mhm,
looking at a 7 cap on multifamily right now, that's a big jump from where it was. But if you go back to 2015, it wouldn't have been a jump at all,
mhm,
right?
mhm,
And so
mhm,
understanding that and really putting together a knowledge base for yourself that you can say, I get this. I don't know how they're going to raise the rents. I don't know what color they're going to paint it, but I understand this operator and I understand this product.
mm,
And
mm,
this creates
mm,
something that is going to make money that's going to take my little soldier and bring him back with some friends.
mhm. I love that. I love that. Yeah, I would imagine, I'm in the game every day, you're in the game every day, and we end up finding a lot of times, I call it the zone, right? it's where you want to become the master at. Like you specialize in industrial and multifamily, and that's kind of like you've done a lot and you could do a lot, but that's like your sweet spot, right?
Yeah.
But if you and if you're a listener right now and you're trying to figure out, well, you don't want to be in the active game because you are a doctor, you own another business, but you got to find the thing that appeals to you. Maybe industrial speaks to your heart, right? Or maybe multifamily speaks to your heart. But then you have to find the right operator
Right.
with the right story, right, in order to
Right.
do that. And then even as the passive investor, you've got to learn that zone,
Right.
right?
Yeah.
Yeah. And so how do you find, like, I'm curious, like, how do you find investors for your projects? Um, because now it sounds like you're doing stuff in Phoenix, you're doing stuff in Raleigh, you're doing stuff like all over.
Yeah.
Obviously, a network like ours, that makes sense. Podcasts make sense, but what else are you doing in order
Well,
to?
I mean, it's really education, right? I
Mm,
mean, look, you lead with value, right?
mhm,
I mean, the last thing I'm going to talk to you, Rob, about is a deal. I want to talk to you about, who is your listener and how can we help with that education? Because
mhm,
the thing is, I don't have anything to sell.
mhm,
I've got
mhm,
stuff that you might want to be involved with, but I don't have anything to sell.
mhm,
And so I don't want I do have a story about one angry investor, right? And this guy, he got involved in the project. It was an appreciation project. We were building a 36 unit apartment complex. Everything was going really well. I get this call from this guy. He's just irate. I haven't got any checks yet. I'm supposed to get checks. And I said, you didn't read the PPM. And I really realized that you've got to educate your
mhm,
investors and
mhm,
you've got to help them understand, why do you want to invest in this? So the first thing that we want to do is we want to find out, what type of investor are you?
mhm,
Are you only looking for cash flow? Then we don't want to show you an appreciation deal, right? That they're worlds apart. They don't make sense. And so then you're educating them on, this is what a really solid cash flow deal looks like. Here's one that has a higher yield. Here's the risk points to that. Here's one that has a lower yield, but here's the benefits to it. Where do you want to be? Maybe some
mhm,
of both, right? Maybe you're going to go, I'm 70 years old. It's like my dad, right? I can't afford to start over, son. Okay, well, then you want the safest thing you can get your hands on with a 10-year tenant in a brand new building. You know,
mhm,
if you're
mhm,
looking at it
mhm,
going, you know what, I'm 55, I'm just starting to enjoy my cash flow. I plan on working for another 5 years, but I'd really like my beach house to get beachfront, right?
mhm,
So now we're going to look at, okay, well, maybe we want some higher yield, but something that's a value add type of deal that we could get some of that upside, right? And so it's really, for me, if you're educating people, you're not finding investors. You're finding people that want to get on the same path that you're on. And you're able to take those people and you're able to say, hey, this sounds like what you're looking for, but he's got some over there that's exact same stuff. He's got a project there that would look like it would fit for you. And getting those people, they're busy. They got 9 to 5s, they got soccer practice, they got all these other things, but they can get in that zone too, where they know what they're looking for and they know why they want it. And then they know how to execute on that. And whether they're executing with you or not, you've made somebody a little bit smarter that now knows how to go and hunt for themselves. And to me, that's really, what I think is attracting, let's call it my tribe, is they
mhm,
want the education, you know,
mhm.
and it's something that allows them to get what they want, but know that it was their idea instead of just walking into a Merrill Lynch and getting it shoved down their throat.
No, I love that, man. All good things happen through education, right?
Yeah.
Um, the way you take on an investor, educated. I mean, I could see the amount of pain that you could save yourself if you're just educating people through that process, setting the right expectations, potentially saying this may not be the right investment for you based on your goals. So you probably have a great intake system to kind of determine, okay, who might fit where. Um, and I love that. I love that. What do you do in order to educate your investors? Do you actually run a podcast yourself, or
Yeah.
do you? Okay.
Well, we do quite a few things. I've got a podcast myself, and I think you're scheduled to be on it. So I got some great talent showing up, right?
Sweet.
Uh, And but we go hands on with you, right? We want to understand your financial picture the way that you see it, so that we can explain it back to you the way that we see it, right? So that we can look at that and go, hey, what's your tax return look like? You just gave $40,000 to the IRS, that we could show you how to make a $30,000 investment in your own behalf down the road. What does that look like for you, right? And we've got a tax strategist that we work with. We've got some, I've got a great team here. I'd love to take all the credit, but I've got a great team here that really drills down and helps you understand that. Because the thing that we found, Rob, is if you give them the education first, they may go somewhere else.
Sure.
And that's okay. They've saved you time because they've shown you what they're after. But we've also understood that if we educate people first, then they're going to make that first investment. And then they're going to make a second and a third and a fourth, because they're going to hone their skills. And what we've learned is that if you invest the time up front, you're building a relationship.
Yeah.
And that relationship creates repeat investors. We've got a guy, I call him $100,000 Rob. He thinks diversification is going to every single one of my deals for $100,000. I had to explain to him the other day that, Rob, listen, you probably gotta, diversify. Don't worry about it, Shannon. I got this. But he goes into every single deal. But he just calls me and says, "What's the deal this month?" Right? Because he understands, and we've educated each other on how we work, and we built a relationship there that's really strong, that's really solid.
He feels confident in the operator as well. He
Totally.
feels confident in the operator's philosophy, the way they do business, how they educate, track record,
Absolutely.
the asset class, the whole bit.
Yep.
Okay. Fantastic. So if somebody wants to find you online, Shannon, and listen to your podcast, what's the name of the podcast?
Well, it's the Robnett Real Estate Rundown. But the easiest way to find me online is just shannonrobnett.com. I mean, come on, Rob, I'm a contractor. I had to make it simple enough for me to remember, right? But if you go to shannonrobnett.com, you can find all my socials there. You can find the podcast links there. You can even get to my calendar and book an appointment. And we could talk about what your investment strategy is and what you want to see done with your future to get you financially independent.
Shannon, these projects that you're doing are typically larger projects, I'd imagine. How many of those projects are you taking on over the course of a year?
Well, unfortunately, Rob, that's had to accelerate as our tribe has gotten bigger. First we were doing, a $35 million ground up development. Now we've got two that are in the ones at about 85 million. We're getting ready to kick off a $120 million project. We've got a couple of $15 to $20 million projects. I mean, so really what we're looking at is, where are the solid economics? And then where's our investor base that wants that? And really kind of going back and pre-raising, if you will. Hey guys, we've got an opportunity for this. This is the kind of number we're looking at. Where are we at? And just kind of going from there. But I got to tell you, Rob, my business has grown over the last 4 years exponentially. And I believe it really comes down to the philosophy that we educate with, that we want our investors to understand what they're doing. And with that, they've told friends and family, and our network has grown.
Okay. How about, let's touch a little bit on mindset, because those are, in my world, those are bigger projects, right? $120 million project, big project, right? You didn't start with a $120 million project. You started with a single family house that you built, right?
Right.
And so help me understand maybe the mental leap that you had to take at some point, or did you never felt that it just kind of like automatically happened? Or was there a day that you actually looked in and said, okay, I'm taking this thing to the next level. I'm going to think bigger.
I'm flabbergasted at the growth, honestly, right? And it comes back. I had a really good partner on a project about 5 years ago that really believed in our ability to take it to the next level. And, but the reality is, if you look at my growth over 27 years, it's been kind of slow, right? So I've been building experience and building experience and building experience. And then the reality is, 2x, or what is it? 10x is just as hard as 2x, right?
Oh yeah. No, it's Dan Sullivan's new book, which I haven't read.
I haven't either, but I just ordered my copy the other day, and I apologize, Dan, I can't remember it. But that scalability is there. If you're doing a 36 unit apartment complex, you're multiplying that and doing a 64. Then you're multiplying that for 128. But the reality is you're not doubling the timeline. You're not doubling the workload. I mean, you are for the framers and the plumbers, right? But for most people, stepping that up incrementally is like going up a set of stairs. You don't just wind up on the fourth floor. You've got to put years in to grow there. And if you wind up working with somebody was on the first floor yesterday and is on the seventh floor today, just take a little extra time and make sure he's got his systems in place, right? Not saying he doesn't, but just take some time and make sure that they are going to be able to do what you need done, and they have the bandwidth and the capacity, and more importantly, the experience and the understanding of when it all goes sideways, what's got to happen in that regard, right? But at the end of the day, I think the scalability of, doing one in Boise, then doing one in Washington, then going to Houston, all of that came from the systems we created here.
Sure.
And I perfected them in my own backyard. I've been doing this for a long time. So when I go down there and interview a property manager, I know exactly what I want, right? This is my laundry list of things I need from you. Are you capable? And if so, tell me the clients that have done that with you. And so really understanding that I have that system and I can walk into any town anywhere and implement that system, just like setting up a McDonald's or a Starbucks. It's all the same.
Yep.
And now you look at it and you make sure you understand the underlying demographics, and then you make sure that you understand how your tenants are going to react, and then you put that system into place.
Love it.
But
Final
I mean,
question.
we still do $5 million deals, right? We've got a $6 million deal going in Florida right now. So it's not that you ever get to the point where $6 million, that's too small. I mean, at least we haven't.
Opportunity, right? You're just looking at opportunities.
Exactly.
So final question. Where do you see the market in the next 12 to 18 months? I want you to look into your crystal ball, right? I feel like we're in this weird phase right now, but I'm getting everybody's opinion on what their predictions might look like over the next, let's say, 18 to 24 months.
Well, Rob, I did just get my crystal ball the other day, but I dropped it and it's now all foggy. But for me, because I've been in the business, I mean, I did my first deal at 9% interest and thought I was killing it, right? So for me, the market's returning to normal, right? So are there going to be people that are going to be upside down versus what they paid? Absolutely. Does that mean they have to sell? Depends on the business plan. Depends on how they did their underwriting. How conservative were they? Are they going to be able to weather this storm? This is the beautiful thing about real estate. If you've got a good solid business plan that has a couple of contingencies in it, you're going to make it. And time is your friend. You didn't buy fruit, right? It's not going to get worse with time. Real estate is the other way. It gets better with time, right? Yeah. And so when you start thinking about that, you need to look. I think people's horizons are going to readjust to a 5 to 7 year window instead of a 24 to 48 month window. I think you're going to see interest rates. I mean, come on, Rob.
I know.
We're talking about 7% interest. It's still a great rate.
Yeah.
We're talking like you all of a sudden have leprosy. You're getting 7%, man. I mean, when it was at 2%, I would tell people all the time, I wouldn't loan my brother money at 2%. And I love that guy, But here banks were doing it left and right, and we got used to that. So I think we're going back to a normal cycle where, we went through this hyperinflation part where prices went nuts and interest rates went lower, and hopefully everybody locked in as much as they possibly could for as long as they possibly could. But from there, you're going to want to put yourself in a position where you're looking at the market trends 24 to 30 months out. What is it going to look like? Are you getting short-term debt? And if so, how certain are you that you're going to be able to get out of it at your projection? Because if you're providing a 14% return, but you're saying you're in debt at 5 and you're going to refi at 6.5 versus somebody that's saying I'm in it at 5, but I'm going to refi at 4.5 and I'm going to get a 20% return. If it goes to 4.5, the guy that was saying 14 is also getting a 20% return. He was just more realistic about it. So I think we're going to roll back our Google glasses here. and
We're going to recalibrate.
We're going to recalibrate. We're going to see things trading in the 2016, 2017 cap rate range, price range, and interest rate range. I do think we're going to see some relief on the interest rate side of things in Q1 and Q2 of next year. But am I betting my investors' money on it, or my money? More importantly, my investors' money. That's the stuff I really protect. But no, I'm not. I'm making sure that if I can do a deal today at today's interest rates, we got an upside coming, maybe, but at least there's no downside coming for 10 years.
Yeah, that makes a lot of sense, right? Yeah, I think we'll probably be in this interest rate environment, which is, like you said, my first interest rate was at 7.2%, right?
Right.
So I'm like, but it's been such a shock for so many people, especially when they're coming off of like 4.5% last year,
Right.
to now creeping up on 8%. Actually, is where we're creeping up on.
Right.
So, and office space, there's different segments in the industry, right? Like office space, I think, is super vulnerable right now. Industrial is one of those that I don't see that vulnerability in industrial.
Yeah, but you look at a market, right? Come to Boise, Idaho. I've got a 45,000 square foot office building we bought 2 years ago that was 40% occupied. We got a great deal on it. We've re-tenantized it. We're getting ready to refinance it, right? But when you look at the office space market in Boise, we're not drowning in it, right?
Yeah, every market is
every
different.
market is different, and so when you're being selective like that, and what's going to happen? Office rates are going to fall, right? Office product is going to be super cheap, which is going to create the next cycle for office. What are you converting it to something else? Are you going to be able to buy it, rehab it, and lease it out at $9 a foot instead of 27? What's going to happen there? But that's the entrepreneurial spirit, right?
Yes.
See the problem, but don't focus on the problem. Let's go find a solution to make that, turn that pile of cow manure into something special.
That's perfect.
There's a pony in here somewhere, Rob.
I love it. I love it. Shannon, thanks so much for spending time, man. I appreciate it. I know everybody, all of our great listeners are going to appreciate it as well as they go on what I call the income flip journey, like taking that active income and converting it to passive income. We appreciate you. Thank you so much.
Thanks, Rob, for the opportunity.
Sure thing, man.